Hello and welcome. In 2025, Singapore's equity market has shown exceptional strength, with the Straits Times Index surging past 4,300 points, achieving a remarkable 22.93% year-over-year gain as of October. Amid this impressive performance, three companies have distinguished themselves as market leaders, showcasing the depth and diversity of Singapore's corporate landscape. Today, we present a comprehensive research report on these standout performers: ST Engineering, a global force in aerospace and defense; UOL Group, a premier real estate developer; and DFI Retail Group, a key player in Asia's retail recovery. We'll delve into their financial performance, strategic positioning, and future outlook. This video is for educational purposes only. It is not financial advice and should not be considered a recommendation to buy, sell, or hold any investment. Please conduct your own research or consult a licensed financial advisor before making any investment decisions. First, let's examine ST Engineering. This aerospace and defense giant has been the top-performing stock of the year, with staggering year-to-date gains of approximately 90%. The company's financial results for the first half of 2025 are nothing short of remarkable. Revenue grew by 7.2% year-over-year to reach $5.92 billion, driven by strong performance across all business segments. Net profit surged 20% to $403 million, while EBIT climbed 15% to $602 million, highlighting effective operational leverage and margin expansion. What truly underscores ST Engineering's visibility is its record order book of $31.2 billion. The company secured $4.7 billion in new contracts in the second quarter of 2025 alone, providing a stable and predictable revenue pipeline. The commercial aerospace division remains the largest contributor, accounting for 40% of group revenue, with strong post-pandemic recovery and demand for MRO services. The defense and public security segment continues to grow, with major contracts in digital systems, cybersecurity, and marine businesses, including a notable win with Singapore's Ministry of Defense. Its urban solutions and SATCOM segment has also expanded, winning infrastructure projects such as the Taichung MRT in Taiwan and a satellite ground network expansion in Saudi Arabia. The investment community holds strong confidence in ST Engineering, with 13 out of 18 analysts rating the stock highly. However, after such a strong price run-up, the consensus price target of $8.43 suggests a slight downside from its current trading levels of around $8.70. Analyst targets vary, with JP Morgan setting the highest at $10, implying a 21% upside potential. Strategically, ST Engineering is expanding its global MRO presence, particularly in the Middle East and North Africa. Its ESG profile has also improved significantly, attracting sustainability-focused investors. Looking ahead, the company has adopted a progressive dividend policy, raising its annual dividend target for 2025 from 17 cents to 18 cents. Next, we turn to the real estate sector with UOL Group, a premier developer that has demonstrated robust financial recovery. In the first half of 2025, UOL's operating profit attributable to shareholders soared 45% year-over-year to $206.6 million. Revenue grew 22% to $1.6 billion, driven by strong performance in both property development and investment. Property development revenue jumped 40% thanks to progressive recognition from projects like Pine Tree Hill and Watton House. Property investment revenue also rose 12%, supported by the acquisition of a stake in 388 George Street in Sydney and improved performance from Singapore Land Tower. The company maintains a conservative financial structure, with a low net debt-to-equity ratio of just 0.27x. UOL's Parktown Residence, launched in early 2025, achieved an impressive 92% take-up rate. Its upcoming project, Sky at Holland, is the first major residential development in Holland Village in 5 years, featuring 666 units. The company's property investment portfolio is valued at approximately $12 billion, presenting opportunities for value unlocking through the potential creation of a Singapore REIT. Analysts remain positive. 9 analysts cover the stock, with most giving strong ratings. The consensus price target ranges between $8.20 and $8.37, representing a modest 2.4% upside potential, while DBS Research has raised its target to $8.80. The broader Singapore residential property market remains resilient, with private home prices projected to grow 3 to 4% in 2025, supported by low inventory and strong household balance sheets. Finally, let's look at DFI Retail Group, which presents a compelling, albeit complex, turnaround story in the Asian retail landscape. For the first half of 2025, DFI reported a net loss of $38 million. But this figure is misleading. The loss was largely due to one-off charges from strategic divestments. Underlying profit attributable to shareholders actually rose 39% year-over-year to $105 million, reflecting strong operational improvement. DFI has been executing a portfolio simplification strategy, divesting its stakes in Yonghan Superstores and Robinson Retail, generating gross proceeds of around $900 million, strengthening its balance sheet, resulting in a net cash position of $442 million. Revenue from subsidiaries was stable at $4.4 billion. The health and beauty segment stood out, generating $1.3 billion, a 7% year-over-year increase with strong like-for-like sales growth of 4%. Food operations and convenience stores faced some headwinds but maintained stable margins. The investment community is optimistic, with 8 analysts covering the stock. Average price targets range from $3.45 to $3.71, suggesting up to 9.7% upside potential. Management's confidence is evident in the raised full-year underlying profit guidance to $250 to $270 million. Reflecting its solid financial position, DFI declared a special dividend of $44.30 per share, in addition to an interim dividend of $3.50, reaffirming its commitment to returning capital to shareholders. So, what do these 3 companies tell us about the broader market? Singapore's strong market performance in 2025 is underpinned by several factors. The nation's reputation as a safe haven amid geopolitical uncertainty continues to attract international capital. Additionally, a measured approach to monetary policy has created a supportive environment for sustainable growth. These 3 companies represent distinct facets of Singapore's economic evolution. ST Engineering leveraging long-term growth in defense and aerospace, UOL Group anchored in the resilience of real estate, and DFI Retail Group offering exposure to Asia's consumer recovery story. In conclusion, Singapore's top-performing stocks of 2025 highlight the market's ability to reward companies with strong fundamentals, clear strategies, and exposure to structural growth trends. While valuations may reflect much of the optimism, these firms remain well-positioned to deliver long-term value for patient investors. Their diversity, spanning defense, property, and retail, underscores Singapore's role as a dynamic regional hub capable of nurturing world-class companies across multiple industries. Thank you for joining us for this comprehensive market report. If you found this analysis helpful, please like this video and subscribe to our channel for more in-depth insights on Singapore's markets.